mentioned in the previous module, we are going to see the important terms and concepts of macroeconomics. The economic wealth or well-being of a country does not necessarily depend on the mere possession of resources. The point is how these resources are used in generating a flow of production and how, as a consequence, income and wealth are generated from that process. How does this flow of production arise? People combine their energies with the natural and man-made environment within a certain social and technological structure to generate a flow of production. And this flow of production arises out of production of commodities, that is, goods and services by millions of enterprises. And these goods can be final goods or intermediate goods. It depends on the end use of the good. Some goods are used by the consumers for final use. Some goods are used for further production. So, the production of goods and services is happening and the consumption of these goods and services are also happening. That means production and consumption. These are two main activities that is going on in an economy which generates income and wealth. And there are mainly 4 sectors of the economy based on the economic activities: consumption sector or household sector, investment sector or production sector, government sector, and rest of the world sector, which I have already mentioned earlier. Does the economic activities generate income? How this income is generated? How is it calculated? And how this income, which is called the income of the country or national income, how it leads to economic growth? This is what we are going to see. And what is national income? It is defined in 3 ways. Or we can say national income is calculated through 3 important methods. First one is value added method or product method. National income is the total money value of all the final goods and services produced by a country during an accounting year. It is calculated in the following way: sales plus change in stock minus intermediate consumption minus depreciation minus net indirect taxes plus net factor income from abroad. See how many terms you have to learn here. What is meant by final goods and services? What is meant by money value of all the final goods and services? What is meant by sales? How is change in stock calculated? What is the meaning of the term stock? What is change in stock? What is intermediate consumption? What is depreciation? What is net indirect taxes? And what is net factor income from abroad? So I have given this definition before explaining what is national income. Then only you will understand how many important terms you have to learn first before calculating national income. Next we will see the second method, that is national income calculated through income method. According to this method, national income is a sum total of factor income earned by normal residents of a country through various economic activities in an accounting year. It includes rent, wages, interest and profit received by factors of production like land, labor, capital and entrepreneurship of a nation. It is calculated in the following way: compensation of employees plus operating surplus plus mixed income plus net factor income from abroad. See the important terms here: factor income, normal residents of a country, then economic activities that you have already learned. What is meant by economic activity? Any activity that generate income, money income. Then there are other terms, factors of production. This also you have learned: land, labor, capital and entrepreneurship. And it gets an income as rent, wages, interest and profit. Now see the other terms. Compensation of employees. What is it? Operating surplus, mixed income. Again, net factor income from abroad. Only after learning the meaning of the terms and why it is included in the calculation of national income, all this we will see one by one. Next method of calculating national income is expenditure method of measuring national income. According to expenditure method, it is the national income is the total final expenditure incurred by the four sectors of a country: consumption sector, investment sector, government sector and rest of the world sector. That is C plus I plus G plus X minus M plus net factor income from abroad. It does not include depreciation and net indirect tax. So, C plus I plus G plus X minus M minus depreciation minus net indirect tax plus net factor income from abroad. So, here also you have to learn many terms: total final expenditure, net factor income from abroad, depreciation, which is otherwise called consumption of fixed capital. Again, what is net indirect tax? And by calculating C plus I plus G plus X minus M, we get GDP at market price. So, what is gross? GDP means gross domestic product. So, what is gross concept? What is net concept? All these we have to learn one by one. So, which are the four sectors of the economy? Based on the economic activities: household or consumption sector C, investment sector I, government sector G, and external sector or rest of the world sector engaged in export denoted by the symbol X and import denoted by the symbol M. So we will go through the important terms once more. We are going to see what is meant by production, consumption, gross and net investment, value of output, value added, sales, change in stock, what is domestic income, what is national income, and how net factor income from abroad it is connected to national income, and how it differentiates domestic income and national income. National income at current prices, national income at constant prices, the concepts of stock and flow, depreciation, which is otherwise called consumption of fixed capital, what is net indirect taxes. Net indirect taxes means indirect tax minus subsidy. Circular flow of income. What is meant by circular flow of income? What are the uses of national income accounting? Why is it important? And what are the precautions while measuring national income? Precautions to be taken while measuring national income. And what is private income? What is personal income and personal disposable income? This way, there are many more concepts which are to be taken into consideration while measuring the national income. So, first we are going to see what is meant by circular flow of income. We were discussing the important economic activities that is happening in the four sectors of the economy. So, the main activities: production and consumption. They are generating income in the economy. Money income and real income, both are generated. What is real income? Real income is the flow of goods and services across different sectors of the economy in a circular form. And when goods and services are produced, there are a group of consumers to consume it. While they consume also, they are consuming it by spending money. So there is money income, the flow of money and the flow of goods and services. It is happening in the economy in a circular form. There are three phases of circular flow: production or generation, distribution, and disposition or expenditure. The unending cycle of circular flow of income is shown in the given figure there. The production phase is there, then the income phase, that is distribution of income, and the expenditure phase. So the production phase is the production of goods and services, and while producing the goods and services, the factor inputs like land, labor, capital and entrepreneurship gets income in the form of rent, wages, interest and profit. And after generating this income, that is distribution of income, again this income, that is rent, wages, interest and profit, again spent for getting the goods and services. It generates expenditure. So these are the three unending cycle of circular flow of income. So production phase, production of goods and services, and while producing the goods and services, factor inputs land, labor, capital and entrepreneurship used, and they are getting income in the form of rent, wages, interest and profit. And this income which is generated or which is given there in the diagram as distribution of income, this income is again spent on the produced goods and services. Thus, production or generation means production of goods and services by firms using the services from household. So, the land, labor, capital, entrepreneurship comes from households, and the production of goods and services, it is called real flow or physical flow. Then comes the second stage. It means flow of income from the producer sector to the households in the form of, as I have already mentioned, in the form of rent, interest, wages and profit. This is money flow or nominal flow, and this income is again spent on the goods and services. That is disposition or expenditure. In this phase, the money income is spent by households and other sectors mostly on goods and services which are produced by firms. Thus, by generating demand is raised by the households. Expenditure again causes production. So, what about this expenditure? This expenditure again causes production by the firms which generates income and expenditure. It is an unending flow. So, and we will see that the produced goods and services, its total money value is equal to the income generated is equal to the expenditure incurred. So, by measuring national income through three methods, we will prove that the value added or product, the value of product is equal to income generated is equal to expenditure incurred. The circular flow is of two types, real flow and money flow. Real flow of income implies the flow of factor services in the form of land, labor, capital and entrepreneurship from the household sector to the producing sector, and corresponding flow of goods and services from the producing sector to the household sector. Producers supply goods and services to the households. Household supplies factors of production or factor services to the producers. And it is shown in the diagram there. Real flow, then money flow. Money flow is the flow of factor income as rent, interest, profit and wages or salary from the producing sector to the household sector as monetary reward for their factor services, and the households spend their income on the goods and services produced by the producing sector. Accordingly, money flows back to the producing sector as household expenditure as shown in the flow chart. The other important terms and concepts will be explained in the coming modules. Thank you.